Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. It is August 1st, 9:30 a.m. Philippine Standard Time. The tariffs affecting goods from U.S. trading partners was supposed to take effect in a few hours. But just 2 hours ago, U.S. President Donald Trump has signed an executive order moving the effectivity of tariffs to August 7th to give the Customs and Border Protection sufficient time to make the necessary changes to collect the new duties. Another one-week reprieve for America's trading partners, including the Philippines, which managed to negotiate a deal, starting from President Trump's April 2 Liberation Day tariff rate on the Philippines of 17%, far lower than any other ASEAN nation, except for Singapore, which was dealt with a 10% tariff. This 17% tariff rate soon turned into a uniform 10% when Trump decided to pause implementing the tariff rates across all trading partners to give time for negotiations to take place. And then came the slew of letters from the Oval Office, and where a handful of trading partners received corresponding negotiated tariff rates. The Philippines, in this instance, was dealt with an upwardly adjusted tariff rate of 20%, 3 percentage points higher than first announced. And the rest of the other trading partners' negotiated rates turned out lower than the original. Japan, South Korea, the European Union all got 15% tariff rates. And just this morning, Canada walked away with much higher levies of 35% from the original 25%. The White House also announced the new rates for our ASEAN neighbors, Thailand and Cambodia, after both countries brokered an immediate ceasefire. Each got a 19% tariff. Taiwan, meanwhile, received a 20% levy, while Switzerland 39%. In an official visit to the U.S. last week, President Bongbong Marcos' meeting with Trump yielded a 1 percentage point discount, or a 19% tariff rate as of today. That is 2 percentage points higher than the original 17% dealt the Philippines back on April 2. As the tale of the tariff tape goes, the Philippines has gone from 0% duty rate to 19%, slapped on everything from printed circuit assemblies to insulated ignition wiring sets to electronic integrated circuits, all of which are top U.S. imports from the Philippines. And although the U.S. asked for a zero tariff for all their goods entering our country, the Philippines trade negotiators have said they've offered an open market and zero tariffs only on certain goods, mostly those not mainly produced locally, like automobiles, soy, wheat, and pharmaceuticals. And we're now joined by one of the country's trade negotiators, Trade and Industry Secretary, Cristina Aldeguer Roque. Good to hear from you again, Sec Chris. Welcome to the program.
Yes, hi, Cathy. Good morning. Thank you for having me.
Yeah, you know, a lot of breaking news over the past few hours. Trump setting tariffs before the deadline with between 10 to 15% of baseline rates. And we're also getting reports that it's all going to effect in the next 7 days. So that's about August 7th. What more can you tell us?
Actually, we haven't gotten ours yet, so we're still actually waiting.
Okay, you're actively waiting from the White House because my understanding is you have been actively negotiating from 20%, from 19% with the intention of bringing that down further to 15%. Is that correct?
Actually, they gave us a 19% tariff, so we're not sure what the next steps will be for them, if they're going to bring it down or we retain the 19% tariff. Actually, the ball is in their court. We are just waiting for them to advise us.
Advise us on the condition of what? Did we provide further concessions or any other?
No, advise us on the amount. No, advise us on the percentage of the tariff.
Right, because I did gather from one of the reports that you had been hoping that we could get at least 15%. So that's a 3 percentage point of a discount.
Yes, of course, that was our plan when we went to the U.S. But again, we are not sure what we will be getting. So it's really a wait and see for us.
Okay, so is there a chance for...
Yeah. I'm not sure because they mentioned to us the 19%. So for now, that's what we know that we're getting, the 19% tariff.
Do you think there might be a chance for further reductions on the 11th hour? Where now that we've got 7 days, what is the negotiating team here in the Philippines planning to do now that we've got 7 days of a reprieve still?
Of course, we've already expressed to them exactly what we want. Because but then again, the decision will be there.
Tell us exactly what we want, for the record, Secretary, because it's a trip that you made with the President himself in the past week, just before the State of the Nation address. Could you give us a recap of what we did want and what we told the U.S. about what we wanted and what's good for our country?
No, of course, we wanted below the 17% tariff, but we also actually expressed to them which products were covered or which industries were covered by this tariff, right? But then we still have to wait for what the U.S. will actually give us.
Yeah,
so everything is dependent on them.
Our understanding is what the U.S. wanted was blanket tariff concessions on all products, as Vietnam had agreed to.
Yes, they wanted an open market, meaning all products, but we could not give all.
Why not?
Because it will hurt the farmers and it will hurt the industries in the Philippines. So giving all would actually not be good for our country.
It is interesting how you picked and chose 4 items here: cars, wheat, soybeans, and pharmaceuticals. What was the process of thinking with the fellow negotiators in the panel on how to pick and choose what to open up to zero tariffs, U.S. imports to zero tariffs?
Yes, okay. For the wheat, and of course, that will bring down the prices of, let's say, bread and other products that really use wheat. So, and we don't have any manufacturing or any production of wheat in the Philippines. So that one is okay. And then for the pharmaceuticals, healthcare is very important for the Philippines. And if we bring down the pharma to zero tariff, then that would mean people can actually buy medicines at a very low price, because that's also what we need here. We have 115 million Filipinos in the market for pharma products is actually so big. And another thing is also the medical equipment, which we actually need. We need to strengthen our health care and the health sector of our country. So those are the things that we can offer. And then for the automobiles, we don't produce cars here. So to bring in their automobiles is with zero tariff is also okay.
Yeah, so all this augurs well to the consumer, because that would mean lower prices on goods with these inputs like from soy, wheat. But how soon will the consumer here in the Philippines feel zero tariffs on all these 4 products?
We are not sure exactly when, but once we get the information, we will definitely inform the public.
So ahead of Trump's deadline later, well, it's not later tonight anymore. It's going to be in 7 days. What is the DTI and the whole Philippine government going to do to plan for contingency for those that will be affected? And that includes our biggest export industry, which is electronics, as well as agriculture.
Yes, actually the DTI is really prepared for this. So we've actually been doing this already for years. So we also have to understand that the U.S. is not the only market. The world is the market. So there's so many other countries that we can sell to, and our the local market is also very big. They also must explore the local market. So with them being exporters, let's say the quality is very good, so it's easy for them to export to other countries. The DTI has 29 offices all over the world and 21 trade attachés. So we can definitely do B2B. We can also arrange company meetings abroad. to find other avenues for these exporters that may be affected by the U.S. Tariff. But actually, if you really look, everybody's with tariff. So that actually evens out also the playing field there. So, but for me, I encourage the exporters to find other avenues or other markets other than the U.S. So they can still continue with the U.S. market, but it's really best for them to find also other markets so that they just don't rely on one single source.
As Trade Secretary, what would you recommend then for exporters listening to us? Do they pick and choose from those we have free trade agreements with or will have? What kind of maybe checkbox list should they be guided with?
Okay, the best thing for them is to go to the DTI and we can really present to them what are the opportunities that the government can do for them. And then from there, we can move forward. It's easy for us to arrange different meetings abroad or worldwide using the DTI offices and the trade attaché. We've done this before. We do this for extra large corporations. We do this for large, and we do this also for small and medium enterprises. So the success rate of this B2B and the trade missions and meetings is very high. So they should take advantage of what the government and what the Department of Trade and Industry can offer to them.
Well, let me pick up on the MSMEs because that's also what the President did make a mention of during the State of the Nation address. How is the DTI enhancing the support ecosystem for the micro, small, and medium enterprises, especially in terms of not just financing, but digitalization, trade facilitation, and export market access?
Yeah, actually, there's a lot of programs for the MSMEs. You know, we also launched like a few months ago the B2B marketplace, the DTI B2B marketplace, which is the largest marketplace for all Filipino products. So that's for both local and global use. You know, they can access the products both locally and globally. And it's really a wholesale market. So they can buy there. If they're looking for products, they can go to the DTI B2B marketplace. That's one. And number two, we have the trade shows, which we are aggressively doing, and our sales have really grown leaps and bounds. Aside from that, again, the DTI offices all over the world, we constantly set meetings for both extra large, and small and medium enterprises to meet with different businesses in the different countries worldwide. So there's really a lot that the Department of Trade can offer to them. They just have to take advantage of this. They can go to us. They can call at 1-384 or report to sec@dti.gov.ph, and definitely we will assist them. We've been doing this aggressively and regularly.
Right. Essentially, what we want is to preserve jobs or even create new ones with the reforms that you're instituting now at the Trade Department. There's a renewed stress on job creation, inclusive growth. So what fresh programs do you have DTI is rolling out to ensure that there are more jobs and livelihoods, particularly for the low-income households?
Yeah, okay. Aside from what we have now, which is actually a lot already, we just launched the Women Enterprise Fund, because our president wants to encourage double-income families already, meaning the women-led or women-owned or the women that may want to get into business. We have funds for them. So they can go to sbcorp.gov.ph to check or to apply for a loan for this. And we encourage also for the women to really get into business, so that a double income is really something that we want every household to have, because then they can avail of better education, better quality of life. They'll be able to, level up the family. And the other members don't have to go abroad now to find a job, because then they have at least extra income here.
Okay, just as a final point, Secretary, we do have that 7-day reprieve, August 7th. What does the Philippine negotiating plan to do in the intervening days?
Of course, we are still coordinating with the U.S. And of course, there's still other information that they may want or they're getting from us. But for now, we are just on wait, and we are just really waiting for what the U.S. Will inform us.
Were you told beforehand that the executive order would be announced by President Trump?
That one I'm not sure.
All right, then we'll leave it there. But thank you so much, Secretary Chris Aldeguer Roque,
Cathy.
for taking the time to speak with us of the Department of Trade and Industry. And you're watching Money Talks. Coming right up, the Philippines may likely miss its target of becoming a high-income country by 2040, says DepDev Chief Arsenio Balisacan. And Jingyi Pan of S&P Global Market Intelligence talks about the country's manufacturing activity. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The Philippines may miss its goal of becoming a high-income country and ending poverty by 2040 if growth stays at its current pace. Department of Economy, Planning and Development Secretary Arsenio Balisacan says the COVID-19 pandemic wiped out 3 years of growth, making the 2040 target unlikely unless the economy picks up. He says a 6% growth is not enough as neighbors like Vietnam and Indonesia push for at least 8%. The economy grew 5.7% in 2024. This year's target is down to 5.5% to 6.5%, while 2026 to 2028 targets were lowered to 6 to 7%. Balisacan says the updated Philippine Development Plan focuses on reforms to sustain faster, inclusive growth and cut poverty to single digits by 2028. Under Ambisyon Natin 2040, the country envisions a high-income, predominantly middle-class society where no one is poor. And headline inflation in July may fall below 2%, according to the Bangko Sentral ng Pilipinas. The BSP projects inflation between 0.5 to 1.3%, slower than June's 1.4% and the 4.4% in the same period last year. This as rice prices continued to decline. Meanwhile, upward price pressures for the month are likely to be driven by higher food, fuel, and power prices, as well as the depreciation of the peso. The International Monetary Fund also expects inflation to stay below 2% this year, giving the Bangko Sentral more room to cut interest rates. The Monetary Board's next policy meeting is on August 28th, where a rate cut is still on the table, according to BSP Governor Eli Remolona. Let's take a look at our markets. PSEI opening this Friday higher by 0.1%, 6,257. A bit of a respite there after 5 straight days of declines. Seeing the market, though, trade below 6,300, hitting a one-month low yesterday, Thursday, slipping by 8%. Investors remain cautious ahead of the August 1st tariff effectivity and the digested outcome of the Fed keeping rates steady. So what we're seeing right now is an effect of the reprieve that President Trump had given of another 7 days for all trading partners. The broader all shares index also tumbled by 1%. Local counters were in the red, led by mining and oil. Let's take a look at the Philippine peso, see if that's also stronger. Looks like it is. Stronger at 58.25 to the dollar. Peso sank to the $58 level, hitting a near 6-month low against the greenback. The local currency closed at 58.32 to the dollar. Traders attributing the depreciation to Fed Chair Powell's hawkish comments that dampened hopes for a September rate cut. And the 10-year government bond yields have ticked down to 6.198% from the previous close of 6.21%. Philippine factory activity expanded for the 4th consecutive month this July, though the manufacturing sector remains cautiously optimistic. The Philippines manufacturing PMI in July stood at 50.9, up from 50.7 in June, according to figures from S&P Global out this morning. This signals a returning momentum in the manufacturing growth, with outputs rising and subdued inflation offering a sliver of optimism among manufacturers. Despite this, the S&P said purchasing and employment rose at a slower rate, pointing to underlying caution within the sector. Overall, firms hold on to hopes of improved demand conditions, with confidence emanating among firms of higher output for the year ahead. And with us now for more from Singapore is Jingyi Pan, Economics Associate Director at S&P Global Market Intelligence. Good to see you again, Jingyi. Welcome to the program.
Good morning, Katie, and thanks for having me on this morning.
All right, so I gotta say, it should be a silver lining, right? Do you agree? I mean, that's consecutive months of an uptick there.
Well, yeah, definitely, Katie. I would say what we see with the Philippines manufacturing PMI, it's among the bright spots in ASEAN, including the likes of Thailand and Vietnam. We do see some of this positive reading, whereas contractions in output were generally seen in the others. Broadly, I would say this is accounted for by what you just mentioned, that demand itself is still growing, albeit at a slower pace compared to June. And that has actually really helped to spur the improvement in employment conditions and also just purchasing activity. But with that being said, again, the emphasis here is on things slowing down. We do see some of this still actually being well supported by the front loading, so a very diminishing but still present front loading of activity in ahead of the tariffs, as I just heard you talking about it as well. We did have a bit of extension already into 1st of August and a little bit more. But for what our data has captured, definitely there has been some of this front loading still supporting this growth.
Exactly, the front loading there. I mean, one would think that we're getting a lot more new orders because everybody's just trying to chase that moving deadline. So what impact is it having on new orders? So, I mean, the customer acquisitions, how are those coming along?
Well, at least from the comments coming through from businesses in Philippines, the manufacturers themselves, they are mentioning that this itself is actually improving. And broadly around the region, we also do find that a lot of companies are thinking of more ways to just really do promotions, do more of this marketing efforts before the tariffs itself really start to bite. And that has helped to actually keep demand situation positive in the Philippines itself. But with that being said, I think, again, if we look at the likes of the future output index, which measures sentiment, although that has actually improved from June, but June was among the lowest you have actually seen since the COVID pandemic. So I think people are starting to be cognizant of the fact that a lot of the front loading activity has really been taking place, and into the second half, alongside our projection at S&P Global Market Intelligence, we do see the potential for more of this slowdown to actually be taking place, especially because if you talk about it, the stocks that you can actually keep in your warehouse is limited after at certain point as well. So into the second half, we could potentially be seeing some of these hangover from the front loading so far, Katie.
That's true. It's really an interesting chart. When you take a look at the consecutive upticks, it's been gradual. So that's where the cautious optimism is. But when you look at fundamentals, I mean, beyond promotions, how do we stand out or even stick out or maybe even fare in the ASEAN?
Well, so I would say that if we look at the ASEAN number itself for the month of July, that's really, well, even though it's above 50, it's just above 50 itself to actually mark a rather stabilization of conditions. And with the Philippines number, as you just mentioned, at 50.9, it's slightly, well, faring a little bit better than the ASEAN region as a whole. I think, the picture itself, as we have already been aware of even before the announcement of tariff, is that the Philippines will actually be relatively less well exposed to the impact of tariffs as compared to the rest of the region. And certainly on the data front, we are still seeing that being the picture. But of course, I think, with that being said, there's also the impact on the rest of the region as well, and how that, the other key trading partners is going to impact the Philippines. And at this point, I can only say that I think we are still seeing a lot of uncertainty on the picture ahead, even though what we have heard so far, despite the fact that, the tariffs, as you mentioned, for the Philippines is announced at a rate that perhaps is higher than what the Trade Secretary would have liked, but is still representing what is actually an optimistic scenario for us in our projections as compared to, well, there being a stalemate in terms of any kind of agreement at all, Katie.
Right, they were looking for 15%, but still remains to be seen. It's still at 19, and we did get to talk about jobs because that's the most important metric. When you speak with the government, jobs in June grew for the first time in 4 months, so that was the strongest pickup since November of last year. But how has that trended though in July? Did you see some more of a silver lining there, or is there also a bit of a slowdown?
Well, I would say that the picture itself is actually still very marginal growth in terms of the employment picture in the manufacturing sector. This, of course, driven by the fact that the new orders itself had remained on the rise, and you have seen a bit of building up of the backlogs. So companies themselves have actually opted to actually hire more headcounts in the manufacturing sector to cope with this. But I think one thing that I really want to caveat, and that we do see that not just perhaps for the Philippines and also across the region as well, is that a lot of these headcounts are also hired on a part-time basis. So it remains to be seen if this will be a permanent increase as well. We do see that potentially this being a reflection as well of the front-loading orders that are being sorted ahead of the tariffs deadline. So that could actually be one of the drivers. So we do have to actually again wait and see in the picture. But of course, the sentiment itself, as I mentioned, is still very subdued by historical standards. So I think it's important to see that pick up as well for people to actually be hiring, which employment typically been a bit of a lagging indicator of how the economic situation is doing.
But what
Katie.
about when we consider the leading indicator of pricing, considering the inflationary pressures or the lack thereof, determining the input and output costs?
Yeah, so that's a great point. Certainly, I think we have seen in the latest survey itself that the input price index, that itself is still on the rise, so showing that manufacturers are facing higher cost pressures, albeit at a softer pace as compared to June itself. And they have continued to actually raise charges at a rate unchanged from June. So this is actually still telling us that they're confident in terms of raising prices as compared to some of the other regions, including mainland China, where we're seeing selling prices coming under pressures just from the competition, and also the fear of new orders really slumping. From that perspective, I would say that pricing power is still with the manufacturers based on our data, but you are also seeing a picture of just really inflation not being too rapid in any manner at all. And that is also well pretty much bang in line with our projections of inflation being subdued, and well, the BSP themselves could potentially actually cut again, and we see that around October being the date that could happen, and that is actually really important because that will actually help to show up growth for the Philippines through the rest of this year.
All right. Well, happy to hear some silver lining in there. Jingy Fan, thank you so much for your insights on this breaking news of S&P Global Market Intelligence in Singapore. And before we go, just take a look at this glass installation that's just been officially named the largest glass tube installation by the Guinness World Records. The Mangrove is a 25.4-meter glass sculpture at Soler Resort North in Quezon City. This luminous masterpiece, designed by sculptor Nicholas Weinstein, took over 4 years to create, a tribute to nature's strength in human craft. The record attempt was held May 7 to 8 and was officially declared a record holder by a Guinness adjudicator in front of guests and staff at the resort's grand lobby. Another one for the pictures for IG. That is it for Money Talks. I'm Cathy Yang. Catch us again Monday, 9:30 a.m. here on One News. Have a great day and a great weekend ahead.